The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we saw broadly lower grain trade on Monday session across corn, soy, and wheat futures. We tried to move off the session lows into the close, but mostly to the downside, while meantime, cattle futures set some more highs early, kind of backed off, tried to gain some of it back into the close as well there. So kind of a mixed bag across the board, lower energies, a lot for us to take a look at. Joining us for market analysis, John Heinberg with Total Farm Marketing. John, good to have you back. Hope you had a good weekend. And, the weekend brought us some headlines that I thought were going to really move the grain markets with the whole U.S.-Colombia tariff chatter, and then seemingly got itself resolved. But I guess I would just say that, the threat of tariffs and more of the news headlines, just case in point, going to be a factor to watch in these markets here as we move forward, I think.
Yeah, I agree with that. Again, you just saw the reaction in terms of the talk and the market open last night because of the Colombia situation. Then when that kind of got resolved, all of a sudden the market rallied off those lows. And then we're dealing with this announcement of new AI by China in terms of their program that they're coming out here, which is just sending tech stocks down the tubes here today. NASDAQ still trading 700 plus lower, S&P well over 100 points down. Maybe got some rotation into the Dow stocks from that as the Dow stocks continue to trade higher. But, I think it's just a lot of instability going into the session today because of those things. Throw in some better than anticipated rains in Argentina. Again, still watching the harvest pace, planting pace in Brazil, which still is somewhat of a support in this market. So there's just a lot of moving pieces right now. Obviously, the biggest thing is momentum looked like it kind of slowed at the end of the week last week for both corn and soybeans, getting a little follow through today. So the question is, tech selling today? Is it just truly driven by the news headlines today? Throw in a week of export inspections for soybeans that continues to look disappointing on charts and longer term. So it's just a market right now that maybe we've kind of hit our run here with the combination of outside information as well as producer selling, that maybe these grains are set up for a little bit of a pause.
And that's a good point. And I was going to say, too, the farmers selling that we've seen, U.S. farmers, South American farmers even as well, off the Chicago exchange. I mean, we've gotten to some price levels here that we haven't seen in quite some time. So you have to think that maybe some remaining old crop getting moved and or even some new crop potentially getting priced in here a little bit at some of these levels in the grains, John.
Yeah, definitely on the corn side. I still think the meat and the bone is a little thin for the soybean side, especially on that new crop for producers. But you're still looking at a heck of a run into this price level with a big supply coming out of South America. As the weather continues to maybe straighten out, it's going to still be here. And we still got to deal with that in the marketplace. But I do think on the corn side, we hit the magical $5 for May and July last week and almost got there in the March contract. And with basis contracts coming down the pipeline, it was a great opportunity for producers if they were waiting for that. Here it was that they needed to pull the trigger. Hopefully they have. That's something we've been kind of recommending in here, at least. And you still got to reward the rally per se. Maybe not go into a full speed, but at least go into it incrementally. And then if we hit some downside targets, I'd say, all right, I got to pull the trigger. Then we pull the trigger.
Yeah, and that's a key thing here. We've been talking about this for so long, managing risk. And I know a lot of farmers are looking at their input costs for 25 and more and moving forward. And they're still looking back at last year's books and, trying to make sure they can break even, make a profit. So, I mean, it just all comes down to looking at your farm here. I think that's a key thing to think about here when the markets are taking a little bit of a pause is, okay, what's my situation? Where am I at? And where am I exposed, so to speak? Right, John?
Very much so, and everybody's going to be in a different place in terms of where their risks are. And, that's, again, the biggest thing I think this year is going to be, we're probably not going to see a boom of prices barring some weather event. You're going to maybe have to be at the stage where minimize losses in some cases, like a soybean market where, obviously break evens and those values aren't even on the table yet for some people. But again, sometimes the cost of doing nothing can be a bigger cost than doing something to manage that risk. So that's something producers need to really sit down and pencil out this year, probably more than they have. It's not going to be just kind of raise it and cash the check at the end. This year is going to be very, very difficult in terms of the cost of inputs into this and the minimal opportunities so far that we have in this market. Again, obviously, barring weather.
And throwing to the news headlines and or the funds, they continue to be a big talking point in these grain markets, just with their positions. And they flipped their soybean position recently, so I mean, a lot of that fund money and activity is going to be a big driver here as well that we have to deal with.
Very much. And just again, watching on the corn side, pushing near all-time highs. And, that was on Tuesday last week. Then we got to ask ourselves, how do they flow this for this time of year? 2022, 21, they ran those all-time highs and just stayed sideways. Saw a little bit of a dip during the planning window and things of that nature, but really never pulled out of their long position. Well, until we got into 2023. Now, 23 again held this position here till about the 1st of March. We got those March acre numbers, and down things went in terms of aggressive selling off their long position. Without the talk of extra acres being out there this year, that could be something that could come into play. That maybe this market just grinds here for a little bit. So we'll have to watch. The money flow is going to be a big trigger. We'll talk about that in the cattle side of the market too. You can just see that the money's moving around a little bit there. And sometimes the fundamentals will go to the back burner in that case, if the funds just say, all right, it's time for us to rechange our position and sell these grains, sell the cattle, sell whatever they need to, and push that money lower. So those are going to be big factors, and those are going to be more macro driven probably than the basic fundamentals. So that's something, obviously, again, when you come to managing the risk, you just got to look at where the market is. Is it overbought? This is a window to make sure you got some floor in. If you're sitting on old crop bushels and you think we got some more upside room, then pick up some puts here. At least put a floor underneath this thing in that regard. If we do get some walk back, you got some bushels sold, and hey, let's look at the call spreads or calls over top just to keep something going. So again, stay balanced, stay on task in terms of what your targets are, and again, assess the situation, look at what risk needs to be protected.
All right, you mentioned cattle. Let's go there and talk about it. Record set cash futures last week. Started off Monday's session higher, kind of backed off, tried to find some green in futures to close it out. But man, oh man, John, cattle, what can you say? Just an impressive market for several months now.
Impressive, and at the same time gets a little scary when we start talking these types of moves at this price level. And not that it's not merited given the cash market and what we saw there, the strength in the February contract, just to keep the basis somewhat in line with the cash market. Not seeing any indications that cash is going to fall apart yet this week either. So we'll have to continue to watch for some potential upside movement. Good day in the retail side again today with good strength in select carcasses, a little firmer in the choice. So we're still seeing good retail demand here, which is something a lot of people, including myself, thought we would probably start winding down here, given the price levels. But it's still that U.S. demand for, the U.S. consumers' demand for beef continues. So as we go forward, watch that feeder cattle market did reverse over today and they put that negative close in. Is that a sign that momentum was running out of gas, or was that just some profit taking? Live cattle didn't quite make that turn, still stayed in the positive territory. Throw on top of it a cattle on feed report that wasn't exactly negative on Friday, with those cattle on feed slightly below expectation, placements light. Some of the question is, though, it seemed like the heifer count seemed to be down. Is that because they're moving some cattle back into the pastures that were available this year on the heifer side? So, those are some bigger trends that we'll still have to keep watching here. Are we finally at a stage that contraction could be coming to an end and we're getting some rebuild? But at least here in the short term, this cattle market still looks very, very strong. But with that being said, at the high today, we've popped this February contract $10-12 in about 4 or 5 days. April, strongly higher as well. There's put opportunities out there that are good value, puts that are now well into the money that were way out of the money a little bit ago. Really not a lot of cost to them. So that's where I've been doing my hedging with guys, is just picking up the puts, putting a floor under this market that easily, if we go back to the breakout point, we're going to be back in the money on those puts.
Got a cattle inventory report later this week. Could that potentially be a black swan type event, throw a wrench into this cattle market, or could it be supportive? Hard to guess a report, but I know this one's a big one.
Yeah, we're going to be looking at those cow numbers, where they are in that regard, the breeding inventory, side of it. Cattle and feed has the feedlot side of it covered. But what's going to be that base projection for those longer terms? Again, this market's going to be watching to see if we are finally seeing some contraction stop. Do we get some expansion, getting some heifers back into the breeding herd? That could also be some of the reason we're still a little bit tighter on numbers right now. On the kill side of it is just the pure fact that heifers are leaving the feedlot and going back into the pasture lands, and then we're tightening up those supplies a little bit more. So that number, that'll be more of a long-range projection that we'll be looking at off that cattle inventory report. But that'll be something to see if there's any trends that are changing that we haven't seen over the last couple of years.
Any thoughts in hogs or the dairy trade here, John, as we wrap it up today?
Nice move in the hog market here. Basically, probably some short covering up. They've really kind of cut that long position down in the last handful of weeks. Did hold some nice technical support on that April contract. Now we're bouncing off it. So, again, we'll have to see, though. We're back to an area where we got a little resistance over the top, maybe making a nice big wedge pattern. So we'll have to see if the market can get through those previous highs. That if we do, then we got some room to run. I think it's a little bit disappointing, obviously, is where the cash index is to that April contract. February comes off the books here very soon. So, that April's now more of the focus. Milk market, really good day. Nice turn in cheese prices last couple of days. So we got some value into probably an oversold market. Again, probably building some trading range here. If we get back to the top of the range, still I think going to be opportunities for producers to make sure we build some floor. But you're still watching milk production, cattle numbers that are out there, supportive right now, at least in terms of the milk market. But again, it's still going to be driven by the price of cheese and where we are with those cheese supplies. As inventories do look a little bit soft here, that could help boost prices up.
John, if folks want to reach out, have a conversation with you there at Total Farm Marketing, I know a few ways to get a hold of you. How can folks get in touch?
Give me a call, 1-800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. Don't forget that website of ours, totalfarmmarketing.com.
Always good to hear from you. John Heinberg with Total Farm Marketing. Thanks for joining us today on Market Talk, and we'll talk to you next week.
Sounds good. Have a great week.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.